Mr. Bridgeman.
Thank you. Ranking Member Backus, Ranking Member Graves, and members of the committee, it is an honor to be here today. I am sort of the poster child of SBA lending, of community banking, and also I'm a receiver of TARP funds, so I'm a rarity in community banking. Ladies and gentlemen, I have never been to Wall Street, but I have lived and I work on Main Street. I have never made a subprime loan. I can barely say derivatives, let alone put it on my books. We do not compete with loans at the local level with our too-big-to-fail banks. We do not. They do not come into our communities and ask for loans, but they do come into our communities and they ask for deposits. Currently, community banks make up 11% of the total financial network. We at community banks make 38% of the small business loans that fuel our economy. It's the small business loans and the small businesses that put 60% of the new jobs together for this country. You've asked the question as to why we are not lending to small businesses. There are two primary factors. First, small businesses have taken a pounding in the last 2 years. Their financial statements are in chaos, and they do have a tough time qualifying for credit under prudent policies and practices. Additionally, the businesses that do qualify are very concerned about their future and whether they should be lending or whether they should be going out and seeking credit or not. Small businesses are concerned about the economy, what's happening with health care and taxes. The other side of the problem is the regulatory burden, as has been mentioned here today several times. Regulators are taking a myopic view of every bank that they look at. When they look at a bank, they are looking at it as if it is an independent institution without regards to what's going on in the larger picture of the country and the economy. I would point out that the letter written by Congressman Frank, chairman of this committee, and also Congressman Minnick, that I have here spells it out very, very clearly what your problems are. And I would tell you that every banker that read this letter stood up and applauded because it is dead on as to what the problems are from the regulatory point of view. There are two primary hindrances that are affecting what banks can do in lending. One is the higher capital ratios. They have arbitrarily and unofficially raised the capital ratios in this country with community banks to an 8% and a 10% minimum used to be is now 12%. With these excessive ratios, we are not able to lend. It hampers the ability of us to loan. Secondly, they have decided that reserves need to be raised to excessive levels, ratios that are therefore taking capital out of the ability to lend. They're also asking us to write off credit. They're making us take impairments that are excessive, and basically reducing portfolios is the result of that. I have had to shrink my bank even though I'm well capitalized. I've shrunk my bank in the loans, on the loan side, and we are working diligently to get our capital ratios, which are well capitalized by all regulatory standards. We are well reserved by all standards, and we are taking those up. Some comments that I've had in my recent examination from the examiners are, TARP funds are used for the purposes of increasing capital and increasing loan loss reserve. That is not the reason that TARP funds were ever created. They were there for lending. And we did loan. We created almost $20 million in new credit, and we were criticized by the regulators for growing our institution. We were criticized for having a concentration of owner-occupied credit, commercial credit. We were criticized for that. We were also criticized for having troubled debts restructured loans. Those loans, TDRs as they're referred to, are how we're helping our customers continue to operate and keep people employed. Some of the concerns I have are that that lending has ceased and that no jobs are going to be created right now. Our economy is struggling, and I will tell you my community is struggling as well. My concerns are also that if we continue running into the commercial real estate problems, we're going to have a second dip in the economy. And I will tell you that the regulators have a lot of control at this point with community banks in determining where the economy will go. In conclusion, I am a community contractor. I build communities, and that helps build our country.
Thank you very much.